All right, friends, I welcome you all to this revision session that we are going to take for the subject of CA Inter Auditing and Ethics. Okay, and for the revision sessions, guys, I hope that you can follow any material that you have been following. You can follow the ICI material. You can follow my material, which is again based on ICI material, or if you can see on the screen, we have these revision charts. These revision charts will also be available on my Telegram channel. You can download it from there also. So it is up to you, right? Okay. Now, how are we going to proceed? If you can see on the screen, guys, I have chapter number one. Okay, as our agenda today. So under chapter number one, what all topics we have to cover, you can see on the screen, right? These are the topics, like if you can see introduction to auditing, then we have what are the different types of audit, some topic with respect to the auditor. So these are the things which we are going to cover in this particular chapter. Now the best part about these charts is that it gives you a complete picture. It gives you an overview as to what all things we have to cover in this particular chapter, and accordingly we are going to go into each of these topics. So if you can see, almost 6-7 topics we have to cover from chapter number one. Okay, all right. So let us start, guys. Chapter number one, which is nature, objective, and scope of audit. Okay, so if you can see on the introduction to auditing concept, okay, what all things do we have to cover here? We have, yes. So we have these topics that we need to cover. So first we'll be covering what is the meaning of the word audit, what are the objectives of audit, then a topic points to be taken care of to ensure that the financial statements are not misleading, what is the scope of audit, and what are the benefits of audit. So all the basics of auditing, introduction to auditing concept, I have just framed it under one head. Okay. So let us quickly start, guys. What is the meaning of the word auditing? All of you know this already. One of your favorite definitions, perhaps something which we had been covering from the fundamentals class, from in almost all the chapters that we do, right? So what is audit? Audit is number one, independent examination of what? Of financial information of any entity. This entity, guys, can be profit oriented or not, irrespective of its size or legal form. And when such an examination is conducted to basically express opinion thereon. So let us quickly break it down, guys. What is audit? Number one, independent examination of what? Of financial information of any entity. Now when I say financial information, it would mean, of course, the financial statements and all the underlying things we can check. Like for example, we can check the ledgers, we can check the journals, we can check all the underlying records. Okay, so that is why the word financial information is given. Now the entity that we are auditing, guys, it can be profit oriented or not. That means it can be a NGO also, it can be a charitable institution, trust, and irrespective of its legal size or form. It can be a big entity, it can be a small entity. And when I say form, it simply means, guys, it can be a company, it can be a firm, it can be an LLP, it can be a society, it can be a trust, it can be an HUF. So audit can happen for any type of entity. But just remember, guys, when we do the audit, when we do the examination of these financial statements, our objective is to express opinion on the financial statements. And because this is a revision session, guys, I hope all of you already know this, that what kind of opinion do we express when I say we have to express opinion on audit. So basically we give whether the financial statements are giving true and fair view or not. Okay, all right, done. Next topic, guys, what are the objectives of audit? Though this topic is something which is more relevant when we do SA 200. Okay, however, let's quickly understand, guys. All of you already know this, that the objective of audit is what? Objective of audit is to express an opinion on the financial statements. And what kind of opinion? Whether the financial statements are giving true and fair view or not. Okay, now few basic things about opinion that you need to know, guys. See, let's say if I am the auditor of your company and I give an opinion on the financial statements of your company, you should not be taking my opinion as an assurance to the future viability of your enterprise. That means that your enterprise is going to survive in the future, it is going to prosper in the future. You can't take my opinion as an assurance to the future viability of the enterprise, nor can you take my opinion with respect to the basically whether you have conducted your business efficiently and effectively or not. So I am not basically giving an opinion on that. So there is one line here: opinion is not an assurance as to future viability of the enterprise or the efficiency or effectiveness with which management has conducted the affairs of the enterprise. So a lot of people who don't know much about auditing, they might think, oh, this financial statements have been signed by a chartered accountant, so of course it would mean that management has done its business properly, they have conducted the affairs of the company, let's say, with effectiveness and efficiency. No, so this is not what we check or what we give an opinion on. Our opinion is only restricted to the fact that whether the financial statements are giving true and fair view or not. Done. Okay, so very basic things. Okay, so 2 points we have already covered, guys: meaning and objectives of audit. Now the third topic that is there, if you can see, I put a star mark also there. What are the points to be taken care of to ensure that the financial statements would not be misleading? Now, this is one area wherein I feel you have to remember the points as well. I mean, of course, other than understanding, we have to somehow retain the points also. And the question has been asked also in the old syllabus as well in the exam, okay, or maybe in the RTP it was there. So, what are the points to be taken care to ensure that financial statements would not be misleading? So, as an auditor, what all things we have to take care of? So, I think we have got 6 points here, guys, if you can see, and very easy points. Number one, we have to see that the accounts have been drawn up with reference to entries in the books of accounts. So whatever accounts, whatever financial statements they give us, basically accounts, let's say, accounts have to be in accordance with what? The entries. Okay, anything that you see, it should be based on the entries. So accounts have been drawn with reference to entries. Number one, it should be backed by entries. Okay, and then any entry that you check, entry should be further supported by some documents, guys. Okay, now for example, if an AC is purchased in the organization, okay, so you'll see the entry for the air condition. Okay, when you see the accounts, you saw that AC is there, so you'll see the entry, and then on the basis of the entry, you'll ask for the supportings, whether it is a genuine entry or not. So you might ask for the purchase invoice of the AC or other documents. So entries are adequately supported by what? Sufficient and appropriate evidence. And it should never happen also in this case, guys, that they have purchased the AC but no entries have been made in the books, because all of you know this already, that omission of anything would also lead to misstatements, right? So first 3 points, if you can see, they are primarily, guys, with respect to entries, right? What are the 3 points again? Number one, that the books of accounts are in accordance with the entries. Number one, no entries should be omitted, and whatever entries have been made in the books, basically they should be supported by evidence. Okay, 3 points with respect to entries. Now, next 3 points are with respect to financial statements. If you can see that information conveyed by financial statements, whatever things are written in the financial statement, it should be clear and unambiguous. Okay, then financial statements should be made in alignment, in accordance with the accounting standards, whether AS is applicable on your company or Ind AS is applicable. Financial statements should be made accordingly, and your financial statements ultimately should give true and fair picture of operational results as in the P&L and your assets and liabilities. Okay, so this is just a way to remember that first 3 points, guys, are with respect to entries. Again, I'm repeating this because I feel, I mean, it requires a bit of retention. It has been asked in the exam, so I feel it is an important question. So what are the 6 points again, guys? Number one, accounts have been drawn up with reference to entries in the books. Number one. Second, all entries which is done should be supported, should be backed by certain evidences. Third, no entry should be omitted. Now let's talk about the financial statements. Financial statements should be clear, unambiguous. It should be made in conformity with the accounting standards, and last one is they should give true and fair picture of the operational results and of course the assets and liabilities. Done. Okay, so this was one important topic, guys. Okay, now the next is another simple topic. What is the scope of audit? Okay, now when I say scope of audit in very layman's terms, guys, it includes that when we are doing the audit, what all things we have to check, what all things should be included basically when you're doing the audit. So this can be referred to as scope of audit. So now under the new syllabus, the scope of audit is basically divided into two parts. If you can see, basically we are going to learn what does the scope of audit cover and what is not included in the scope of audit. Okay, so let's understand guys what it covers. Now, number one, when you're doing the audit, guys, you have to do full coverage of all relevant aspects of the business, okay, which is relevant to the financial statement. So you have to cover everything, okay. It doesn't, it simply means that, okay, you can't just ignore the purchase part, you just can't overlook the sales part, okay. So when I talk about the scope of audit, it has to have full coverage of what? All aspects, which is all relevant aspects of the business, basically, which is actually relevant to the financial statements. Number one. Second scope basically is about the reliability of information. Okay, so we have to make sure when we are doing the audit, we have to make sure that the data which is given to us, or the data that we are seeing, the information that we are seeing, let's say in the accounting records, it has to be reliable and sufficient. Guys, understand, if the underlying accounting records, the data from which financial statements are made, if that data is not reliable, if it is not, correct, of course it would have an impact on the financial statements, right? So as a part of our audit, of course, as a part of the scope of audit, we have to see whether there is reliability of information, because reliability of which information? Basically information in the accounting records, it should be reliable as well as sufficient, okay. And third one is basically, again, we, as a part of our audit, guys, we also have to understand about the disclosure, okay. It simply means that financial statements should properly disclose all the transactions and events, and basically all other relevant information which is required, it has to be properly disclosed. So as a part of our audit, we even check the disclosures. Now, for example, management has done some related party transactions, okay, so we have to see whether appropriate disclosures as per AS 18 has been made in the financial statements or not. So this is also again a part of our audit, okay. So again, guys, what are the things that audit should cover? Number one, full coverage of all relevant things to the financial statements. Second, we have to see whether the information, the accounting records, is reliable, sufficient. And third one is, we also have to see whether the financial statements discloses all things which are required. Done. Okay. Now, after this, we also have to, I mean, because we are discussing about scope of audit, so we have to be very clear, right, that what all things are a part of audit, what all things should be included in audit, right? So let's understand now what it should not include. So what does audit does not include basically? So yeah, number one is limits of expertise. Okay, now what does it mean, guys? From my fundamentals class, okay, I've been telling you this, that you know, we as auditors, we are always going to be called as experts in the field of accounting and auditing, okay. So if probably, sometimes it might happen that when you're doing the audit, okay, you might have to check the valuation of inventory, okay. You might have to, my client has got a very costly painting, or my client is into jewelry business and he deals in diamonds, so you can't just see the diamond and tell the valuation, right? So during the audit, uh, we might have to get some help from the experts also. So you have to understand that you are not an expert in all areas, okay. Your expertise is only in the field of accounting and auditing. So when I say limits of expertise, it simply means that auditors are not experts in determining, let's say, the physical conditions of assets, maybe the machinery, or whether a building is, the structure is suitable or not. So here basically we need to take the help of experts, okay. So of course there is a limitation on our expertise. Always remember, we as auditors, we are going to be experts in the field of auditing and of course accounting and auditing, okay. Now guys, we are auditors, okay. So we basically see whether the financial statements are giving true and fair view. We check, we verify the underlying documents, right? But it doesn't mean, guys, we have the expertise to see whether a document is authentic or not, whether the signature is genuine or not. We don't have such powers. I mean, we don't do, guys, we are not a police officer or a person, like CID and who does investigation. So when I say no document authentication, it simply means auditors can't authenticate documents. Okay, we are not an expert in verifying the genuineness of papers. So whatever management is going to give us, of course we have to be alert, but we can't verify whether the signature is genuine or false, etc. So this is a second thing which is not within the scope of our audit. We can't verify the genuineness of documents. And thirdly, very important point you have to always remember, guys, we do audit. Okay, we are auditors. It's not an investigation. In simple words, guys, we can't just without intimating our client, just randomly go at his house or in his office premises and start searching and start looking in for documents, asking him for certain things. We just can't do things like a police officer can do, or a person from CBI can do. We don't have investigatory powers. In fact, we belong from such a humble profession that when we even have to check, let's say, any part of the client's books of accounts, etc., we'll inform him that tomorrow we are going to come and please keep your fixed assets register ready. Okay, so when I say not an investigation, please always remember, guys, that audit is not an official investigation, and we as auditors, we don't have legal powers to conduct search, or we can't ask our client to give us statement, or under oath or something like this. We can't to go with this. So please remember, the scope of audit basically is you know um, it is different from what we do in investigation is totally a different thing. Okay, so guys, all right, so we are done with the topic of scope of audit. Okay, so in the new syllabus, it is given in this manner, what it covers and what it does not cover. I hope you're clear on this. Okay, all right. And now if you see in the introduction part, introduction to auditing part, guys, we are left with one last topic. What are the benefits of auditing? Okay, so we have got around 7 benefits of auditing to cover. Again, very, very simple topic, guys. Imagine, I mean, if somebody gets the financial statements audited, what benefits would accrue to that person? Okay, or that entity, right? So number one is basically high quality information. Guys, see, if let's say you are the user of the financial statement, okay, and you happen to be one of the shareholders, or let's say prospective investors, and when you go through the financial statements which is audited, so it gives you, you get to know that, oh, it's audited. That means whatever information is there in the financial statements, or let's say notes to accounts or disclosures, etc., it will be of high quality. I mean, the chances of errors would be very less. Okay, so guys, understand, I mean, when the financial statements are audited, it becomes more trustworthy document. So I can say high quality information, and because of this, the shareholders confidence also increases. Okay, now please understand, it is guys, in a company, if I talk about the company, the shareholders put in their money in the company, right? But the company, the daily affairs of the company is run by the management of the company, the directors or the management, right? So when the financials of the company are audited, it gives confidence to the shareholders that the company's affairs are managed properly. The directors of the company are not running the company for their personal gains, etc. So it gives them a confidence. Okay, now if you see, guys, there are two words with respect to fraud. Okay, point number 3 is fraud detection, and point number 4 is for fraud prevention. Okay, so in very simple terms, guys, if let's say I happen to be an employee of an audit of an entity, and I know, oh, in this entity we have audit, we have the audits. So this might basically, if I have something bad in my mind, if I have a malicious intention, but I know, oh, in this company we always have the audit. Even if I do some ghapla, if I do something, some fraud, I would be caught. So probably I would not be indulging in such kind of activities if I know audit is done and I would be caught. So remember, guys, that auditing helps in fraud prevention as well as fraud detection. When I say fraud prevention, basically, the employees would now be very much hesitant or reluctant. Audit will act as a deterrent. Basically, they would not indulge in any kind of fraud. Okay, so this is fraud prevention. It's a preventive aspect. But then let's say somebody has committed a fraud, but during the audit, if you do the audit properly, you might get to know about the fraud. So it might also help in fraud detection, if you can see. So audit can basically uncover instances of fraud or errors in the financial reporting. So we have 2 points: fraud prevention and fraud detection. Okay. Now, guys, one of the users of the financial statements, all of you know this, is government, right? Why would government be interested in our financial statements? Government would be interested in our financial statements for the purpose of determining the taxes, right? So one more benefit of audit is tax determination. When you submit audited financial statements with the government, they also rely that, yeah, the financial statements are correct and the tax amount, perhaps, which is calculated on the basis of the financials that you have given, is also correct, right? So government authorities, they also use audited financial statements to determine the tax liabilities of business. Okay. Then we have credit decisions. All right. Now, guys, if let's say a bank, you go to a bank and you want to get a loan from them, they would not just give you a loan by, seeing your face. They would want to know whether you have the capability to repay the money or not, whether you have the capability to keep on paying the interest, the installment part. So for that, they would want your audited financial statements. They would basically want to see your credit worthiness, right? So when I say credit decisions, also lenders, bankers, they also rely on what? Audited financial statements, and accordingly they make a call, they take a decision whether to lend money to a particular entity or person or not. Okay. And finally, if you can see the seventh benefit, we have a point called as control review. Now all of you know this, right? I mean, I'm assuming that a bit of auditing you all know, right? And you all know this, that guys, that auditor, when he does the audit, as a part of his audit, he is also going to assess the internal controls of the organization, right? So this is another benefit of auditing, that guys, when I assess the internal controls of the organization, if there are certain flaws, if there are certain deficiencies, I can give suggestion to the management that, you need to have this control. The control that you are having at the moment, it is not good, there is a deficiency, right? So basically, audit reviews the existence, the effectiveness of the various controls within the entity, and it helps them to identify and address any deficiencies in the internal control. Okay, so always remember, guys, there are seven benefits of auditing. I'm repeating the headings again. If you remember the headings, I'm very sure you'll be able to write the points. So what are the points again? High quality information, number one. Shareholders confidence. So one and two somehow related, right? High quality information, and then it will be boost the confidence of shareholder. Then 2 points with respect to fraud detection and fraud prevention. Then one benefit for the government, that, yeah, they would be able to assess whether the tax amount calculated by the business is proper or not. Then for lenders, traders, bankers, etc. And finally, for your own good, for the benefit of the organization, this control review is a benefit which is going to accrue to the organization themselves, right? Okay, when we get our audit done, the auditor is also going to assess internal controls, and he might point out certain deficiencies that we have in our control. Okay, again, let me repeat, guys. The objective of auditor is to express opinion on the financial statements. It doesn't give an opinion on the effectiveness of the internal controls, except in certain cases. Okay, but primarily the objective of audit is to give express opinion on the financial statements. Okay, so if you see, guys, with this we have completed the introductory part to the concept of auditing. Though in your study material, if you see, guys, we have few more points, like where did the word audit origin from. So if you want to know the story, guys, remember that audit word is came from the Latin word, which audire. Okay, audire means to hear. So in the old times, in the medieval times, the accounts, basically, the auditors used to hear the accounts. There would be people who would read out the accounts, and the auditor is going to hear the accounts. Okay, so this is how the name has come. And in India also, because of the need of this profession, the Institute of Chartered Accountants of India was established as a part of, basically, a statutory body under the Act of Parliament in the year 1949. Okay, all right. So the basics part is done. Let us come to the next topic, guys, which is types of audit. All right, guys. So the next topic that we have to cover is what are the different types of auditing. Again, a very simple topic. What are the different types of audit? So all of you already know this, guys. Primarily, there are two types of audit. One would be called as statutory audit, and the second one is voluntary audit. Okay. So if I define statutory audit means audit which is mandated, which is required to be done under some law. Okay, so what could be the examples of statutory audit, guys? Let's say companies. Okay, any company, whether we have a private company or a public company, so they are required. It is mandatory for them to get the audit done under which act? Under the Companies Act 2013. Similarly, the banking companies, they have to get the financials audited under the Banking Regulation Act 1949. Similarly, we have cooperative societies which are registered under the Cooperative Societies Act 1912. They need to get the audit done. We have the tax audit also under section 44AB. Some entities which will have a turnover of greater than, let's say, 1 crore rupee, they would have to get their financial statements audited under tax, under the Income Tax Act. Okay, so in very layman's terms, if I say, guys, if an audit is required to be done under any particular law, it would be called as statutory audit. But guys, audit can be done voluntarily also. Now, when I say voluntarily, it means that if it is not required to be done under any law. Now, when would a person get the audit done voluntarily? Let's say, guys, uh, there is a partnership firm and they are asking me to become one of the partners, and then they are asking me to contribute this amount as capital and some amount for goodwill also. So I just can't randomly trust them and pay the amount of capital and goodwill. I might get the financial statements audited. I mean, I would ask them, see, I'll send a chartered accountant, he will audit the financial statements, and if he feels that okay, there is a requirement to pay capital of this much, then only I'll pay. So this audit I got done for the financial statements of that partnership firm. So this is a voluntary audit. Maybe it was not required under the Income Tax Act. Maybe, of course, Partnership Act is also silent about auditing, but I got it for my satisfaction. It's a voluntary audit. Now, one more example, if I tell you guys, let's say I need a loan. So I went to the bank, and now bank has asked me for financial statements. I happen to be an individual. My turnover is also very less, let's say 20 lakh rupees. So I did not get the financial statements audited. Now, bank tells us that it is our policy that if you want to get a loan, of course we'll only assess, we'll only see your audited financial statements. So now, even because, I mean, I'm not required to get the audit done under any law, but because of the need of the bank, because the bank manager had asked me, so I went to a chartered accountant and got the financial statements audited. So again, this is an example of what voluntary audit. So just remember, statutory audit is audit required under law, and voluntary audit would mean, I mean, I told you, I mean, it can be basically done to give assurance to certain users of the financial statements, and which is not done, as a requirement of law. Okay, done. So we are done with the second topic, guys. What are the types of audit? Okay. Now, if you see the third topic is about a bit of about auditor. We are going to cover some things about auditor here. Okay. So what are the things that we have to cover? Let's understand, guys. So yeah, we are going to cover two concepts with respect to auditor. One is basically, if you happen to be an auditor, what are the qualities that you must be having? Okay, so this is again a new topic. So what are the qualities of an auditor? And then we are going to learn about the basics of appointment of auditor. Now, in the old course, guys, we had the entire company audit chapter. So appointment and all, we used to learn in great level of detail under the old syllabus. But now we are just going to have the basics. Okay, so let's understand, let's know about what should be the different qualities of an auditor. If you can see, guys, we have 7 points here. What are the different qualities of an auditor? Very easy and simple points. Number one, guys, when you're doing the audit, you need to have understanding of the financial matters. Okay, I mean, you as an auditor deals with financial matters in business, and of course these financial matters, these are very much prone to errors, human errors and fraud. So you need to understand the financial matters. Of course, this is the first requirement that any auditor should be having. Second, apart from understanding of the financial matters, he should have certain personal characteristics or qualities like tact. He should exercise caution. He should have the firmness, good temper to deal with the different people, to deal with his own team members, to deal with the client staff, etc. So he should have a good temper, also patience. Okay. Third is business acumen, guys. Now, this is again one interesting aspect, a good quality that an auditor should be having: business acumen. I mean, you need to understand how the business works. You need to have good understanding of the business which your client is doing, and accordingly, you would be able to do a better audit. So, all the qualities that makes a good businessman basically also contribute to the making of a good auditor. Okay, then the most important quality, guys, we read it in the definition of audit also, that audit is what kind of examination? It is an independent examination. So the most important quality of an auditor is that he has to maintain integrity and he has to be independent. When I say integrity, it simply means he has to be honest, he has to be straightforward. Okay, then he has to have expertise and knowledge. And I've been telling you this, guys, we are going to be experts in which area? We have to have expertise in accounting and auditing aspects. Okay, we have to have knowledge, we have to have knowledge of the various laws, we need to have knowledge of the various standards, etc. Okay, all right. Now, if you see the next point, which is technical training, what does it mean? Please understand, guys. In addition to the personal qualities that we have covered in point number 2, auditor needs to update himself technically also, so that he is able to do the audit properly. Okay, so technical training would mean updating ourselves with the latest amendments, with the latest standards, so that we can do the audit properly. Okay, and next is critical review skills. Guys, see, we are, when we do the audit, we review, basically we verify the financial statements, the underlying documents, and also we should be having good analytical skills, good or let's say critical review skills. Okay, so we have to, of course, verify so many things, right? So this is again one more quality that the auditor should be having. So remember, guys, we have 7 points here, very simple. Number one, basics, understanding the financial matters. Then we need to have certain types of personal qualities. We need to have knowledge about the business also, business acumen, basics. Then we have to maintain integrity and independence. We have to have expertise and knowledge. We have to update this also through some technical trainings and educations. And we have to have good analytical skills, review skills. So these are certain qualities that should be possessed by an auditor. Okay. All right. Now, if I talk about the basics, guys, of appointment, again, a very simple topic. Okay, and it says, guys, if it is a company, who is going to appoint the auditor? Shareholders. If it is a government company, who is going to appoint the auditor? CNAG. And if it is a firm, partnership firm, who is going to appoint the auditor? Partners. Okay, and as a part of your in your CA intermediate course also, in the chapter of audit of different entities, we also learned about the appointment of auditors of LLP. We have covered their sole proprietorship, we have covered firms, etc. Right? Anyways, so for firms, the partners appoint the uh, auditors. Okay. Now, guys, one simple thing I want to ask you, I want everyone to write the answer in the chat box also, or if some of you would be watching it on YouTube, write it in the comments below. Uh, Hey, see, we have covered appointment of auditors, right? Now, my simple question to all of you is, once the auditor does the audit, whom is he going to submit his report to? What do you think, guys? Whom is he going to submit his report to? Okay, I have got the answer. Some are saying shareholders, okay. But then, guys, let's say if it is a firm, do you see any shareholder here? If it is a firm, whom is the report going to be given to? Okay, now we are saying partners. Niveda, you are absolutely correct. This is the answer that I was looking for. Please remember, guys, generally what is going to happen is the report, the outcome of audit, the report is going to be given to the persons who appointed the auditor, the ones who made the appointment. Okay, so the report is submitted to person making the appointment. Just remember this part. Okay, all right. Yes, so with respect to auditor, also two things we had to cover: qualities and appointment part, which we have covered. Okay. Now, if you can see, guys, almost, I mean, out of 6, 7 topics that we have to cover, we have already covered 3 topics. Introduction to auditing, we have already covered what are the different types of audit. We have covered about auditors also. Okay. Now, a very basic theoretical topic, guys, that the subject of auditing, does it have relationship with other subjects and disciplines? That we have to cover this. Okay. So yes, auditing does have certain relationship, guys, with a lot of other disciplines or subjects, I can say. So what are the things that we have to cover here? Yes, auditing has got certain relationship with accounting, with law, with something called as behavioral science, statistics and mathematics, data processing, financial management, and economics. Okay, now we are just quickly going to understand how is auditing related to these subjects, guys. Of course, auditing is related to accounting. I mean, we have to see whether the financial statements are giving true and fair view or not, whether the financial statements are made in accordance with AS or not. So you have to have good knowledge of accounting. Then only you'll be able to tell or say or give an opinion whether the financial statements are giving true and fair view or not. So when I say accounting, guys, you have to have thorough and sound knowledge of the generally accepted accounting principles. That means AS or Ind AS, etc. And you have to have expertise in the accounting concepts. Then only you will be able to do the audit properly, right? Done. Sir, do we have to have knowledge of law also? Yes, to some extent, guys. Yes, you have to. If you are doing the audit of company, you have to check so many compliances with the laws of the Companies Act 2013, right? Let's say in the audit of a company, we also have to check the amount with respect to provision of taxation. So again, you need to have knowledge of the Income Tax Act also, right? So why do you think that the subject of auditing has some relationship with, let's say, the subject of law? So let's now understand this, how auditing and law is related. So you have to have good knowledge of the laws which affecting the entity, and auditing involves examination of transactions from legal viewpoint. So I told you whether the provision for taxation is correct in accordance with the Income Tax Act. You'll have to see whether the various transactions are done in compliance with the Companies Act, etc., right? So you have to have good knowledge of the laws which affect the entity. Okay, now when it comes to behavioral science, always remember, guys, that what is behavioral science? It is basically an art. It is a tact of dealing with people. So always remember, guys, as an auditor, I need to know how to talk to people, how to interact with people, how to manage people. And it's not just that I have to manage my own team members. I will have to do constant interaction, constant communication with the client staff also. So please understand this behavioral science. This is something which is very essential for auditor in discharging his duties. And auditor should have the tact. He should have the art of getting along with the people. And when I say people, guys, it can be, you can see on the screen, it can be client staff and his own staff along with people, and it would mean his own staff as well as client staff. Okay, and he has to direct and supervise his own staff. So in these 2 points, perhaps you will see that there are two different majorly there are two different kinds of people with whom the auditor has to deal with: his own staff. He has to direct them, he has to supervise their work, and he will also have to interact with the, of course, client and his and their staff members. Okay, so the concept of behavioral science is, guys, really very important, one of the essentials for auditor in discharging his duties properly. Okay, then we have statistics and mathematics, probably a subject which many of you might not be liking. You had it last, I think, in CA Foundation. Okay, but then as an auditor, why do we have to have knowledge of statistics, a bit of statistics and mathematics? Always remember, guys, you know why statistics? Because as an auditor, we can't just go with 100% checking every time, right? We have to resort to something called as sampling or test checking. Okay, so how will you draw proper samples from the entire population? So you have to have some knowledge of statistics for that. Okay, now, and when I say data processing, guys, these days, always understand this, most of your clients would be using systems to manage their data, to keep the financial statements, or let's say, the accounting system entirely would be in computers, right? So you have to have basic knowledge of computers. And on top of that, guys, it's not just about the client keeping its financial information in the computer. If you also use computers to do the audit would be better. I mean, let's say for sampling, okay, if you use Excel, if you use some softwares, it would be better than rather than resorting to manual sampling, picking up things randomly, right? So when you use systems for your audit also, it is going to be a better audit. So when I say data processing, it simply means, guys, you have to have working knowledge of EDP. EDP is what? Electronic data processing. So you need to have working knowledge to conduct audit in a effective manner. Remember, guys, two things: that organizations, the clients these days would carry out their financial accounting in systems, number one. Secondly, you can also use systems to do your audit properly. So that is why you have to have knowledge about information systems. You need to know about data processing. Okay, all right. Now, why is FM taught to you? I told you again, guys. Remember, I always say this in my regular classes also, guys, that all the subjects that you have, let's say in your CA intermediate exams, right, in syllabus, you have law, you have taxation, you have costing, you have FM, you have uh, strategic management. Please remember, institute doesn't want us to be expert in all these subjects. They want us to be expert in accounting and auditing. Auditing is one subject which is actually going to be your bread and butter, guys. Okay, but then why are you taught all the other subjects? You're taught all the other subjects specifically, primarily, so that you can do the audit properly. Now, if you don't know Income Tax Act, you would not be able to calculate the provision for income tax, right? If you don't know the basics of mathematics, probably, or statistics, you won't be able to apply sampling technique properly. If you don't know the basics of financial management, you would not be able to understand the financial statements of the entity, because when we get the financial statements to do the audit, we calculate all the important ratios, we compare it with the previous years to see if there is any fluctuation and all, so that if there is a fluctuation, you would devote more attention to those areas during the audit, right? So you have to have a bit of knowledge of the ratios, comparisons, etc. Hence, financial management is also important. So it helps in understanding. Remember, FM will help in understanding and evaluating the financial statements in a better way. And of course, you will be able to do the analytical procedures, the intelligent audit procedures. Okay. We just can't go every time with test of details. Analytical procedure is much intelligent audit procedure. Okay. And economics was also there in your CA foundation, right? So as an auditor, guys, we need to have the basic knowledge of the business and economic activities affecting the client. Like, we need to have the knowledge of as to how the purchases, the sales, all these activities happen in the entity, right? So these are the economic activities with which we should be well versed in, right? So these are the different disciplines or subjects which the auditor should be having knowledge of. And hence, guys, this topic, I mean, it's a very age old topic. I mean, so many times the course has changed over the number of years, right? The syllabus of audit has changed, but this topic is there since almost like 15 20 years, right? They make certain changes, keep on making certain changes in the new syllabus. They have reduced the content, only one line they have given, but then yeah, it is still there in our syllabus, so you should be doing it. Okay, all right. Now we have completed, if you can see, guys, we have actually completed the basics portion. I mean, we have completed introduction to auditing, we have completed the different types of audit, about the auditor, and of course, what is the relationship of auditing with other subjects. Okay, now we are actually going to start with the real audit. Okay, so the next topic that you see on your screen, guys, is basically about something about assurance engagement. Okay, now I hope all of you know this, that engagement means work. Okay, engagement means work. And when I say assurance engagement, what does it mean? So in assurance engagement, primarily we are going to understand first the meaning of assurance engagement, and then we are going to cover the different elements of assurance engagement. Okay, so what does assurance engagement mean? Okay, it's a long definition, and I've tried to basically divide it into points in your material also. I mean, if you're following my material, this material, you will see that yeah, the topics basically are given in the form of tables, right? And the definition is again divided in the basically broken down into points for better understanding. Okay, now what does assurance engagement mean? Now, assurance engagement means an engagement. Again, I'm repeating, guys, what does engagement mean? It's a work, okay, which the auditor might be doing. So work in which a practitioner expresses a conclusion. Practitioner is going to express a conclusion, okay, and it is designed to enhance the degree of confidence of the intended users other than responsible party about the outcome of evaluation or measurement of a subject matter against criteria. Such a technical long definition, right? I'm reading it again, guys. What is assurance engagement? It means an engagement in which a practitioner expresses a conclusion. Conclusion about what? Conclusion which is going to basically enhance the degree of confidence of the intended users. And then about what? About the outcome basically of or evaluation of or measurement of a subject matter against some criteria. So perhaps this is going to be really very confusing. So let's just try and understand the definition in a better manner, guys. Okay, let me take you again back to the our main notes. Yes. Now, first thing, guys, you have to understand that a CA, a chartered accountant, can basically be in practice, or let's say he might join some job and be under employment. And globally, you have to understand that a chartered accountant who is in practice globally is called as, internationally it is called as practitioner. Okay. Now, what is this assurance engagement? Okay. Let me just again make you understand. So using this chart, this diagram, so there is something called as responsible party, guys. For the time being, understand responsible party to be the management. Now this responsible party is going to make something called as subject matter. Okay, and this subject matter is going to be there for the intended users. Okay, users of the financial statement. But then there is a problem. How will this intended users trust the subject matter? Because the subject matter has been made by responsible party, right? Imagine it in the form of a company. Responsible party take it as management. Subject matter understand it in the context of financial statements. Now, the management of the company runs the company, and then they are only making the financial statements. So how will the shareholders, intended users, have trust on the financial statements? There's a problem. So now what is going to happen? To resolve this problem, what is going to happen? This responsible party is going to appoint somebody called as a practitioner. That means a chartered accountant in practice. Okay. And this chartered accountant in practice, this practitioner, he is going to evaluate the subject matter against some criteria. He is going to see whether the financial statements are giving true and fair view or not, according to certain criteria. What could be the criteria? Of course, he is going to see whether the financial statements are made as per AS or not, whether they are in conformity with the accounting principles, whether all disclosures are made or not, etc. Right? So he's going to evaluate the subject matter against given criteria, and after he evaluates, he is going to give a conclusion. He is going to give a conclusion on the subject matter, and because of this conclusion, the confidence of the intended users on the subject matter is going to increase. So this diagram perhaps is going to give a good clarity as to, on the definition of assurance engagement. So if I take you back to the definition, let's read it from here only. What is assurance engagement? It means an engagement. It means a work in which practitioner expresses a conclusion. Are we expressing a conclusion? Yes, sir. So practitioner expresses a conclusion. Why? Which is designed to enhance the degree of confidence of intended users. So this conclusion is going to enhance the confidence of the intended user. Okay, so what are we going to conclude on? We are going to conclude about the outcome of evaluation or measurement of a subject matter. So we are just evaluating a subject matter against a given criteria. So this is the technical definition, guys, of assurance engagement, and all of you should be knowing this, that a chartered accountant basically can serve the society in two ways. Either you can be into practice, okay, or you can become a part of any organization by joining the entity as an employee. Okay, all right. So this was the definition, guys, of assurance engagement. I'm reading it again. Let me just go back to my charts, reading it from here. What is assurance engagement? It means an engagement in which a practitioner expresses a conclusion. Practitioner expresses a conclusion. This conclusion is given to enhance the confidence of intended users. So how will the practitioner give this conclusion? He is going to evaluate the subject matter against a given criteria. That's it. Okay, all right. Now, guys, there's one important question that might be asked in the exam from the concept of assurance engagement, and this is basically, what are the elements of assurance engagement? It's a new topic, was not there in the old course, but it's an important one, right? So what are the elements of a assurance engagement? Please remember, guys, we have 5 elements of an assurance engagement. Okay, number one, basically there has to be three-party relationship. Three parties. Now, if you see the diagram, if you again, if I take you back to the diagram here, how many parties do you see in the diagram, guys? We have responsible party, number one. We have the practitioner, number two, and we have the intended users also. So it's a three-party relationships, guys. Always remember, assurance engagement, the first element basically is what? That it is a three-party relationship. Who are the three parties I have mentioned? Practitioner. What does a practitioner do? Of course, sir, he is going to provide assurance. He is the provider of assurance. Second, responsible party. What is responsible party? What do the responsible party do? Basically, they are the preparer of the subject matter. They basically prepare, let's say, the financial statements. Okay, and who are the intended users? They are basically the decision makers, on the basis of which they are going to, on the basis of some subject matter, guys, they are going to take decisions. So intended users, guys, can be shareholders, it can be the bankers, it can be the government, etc. Okay, so number one element of assurance engagement is basically it's a three-party relationship. Okay, then we have to have something called as appropriate subject matter. Now, what is subject matter? Subject matter is the information which the practitioner is going to examine. Okay, so information which is examined by the practitioner. It could be a financial statement also, right? Okay. Third, suitable criteria. Guys, understand the practitioner is going to evaluate the subject matter against some criteria. So what are criteria? Criteria is nothing but a benchmark. It is a benchmark which is used to evaluate subject matter. It could be anything, guys. It can be the standards. I told you whether the financial statements are prepared in accordance with the accounting standards or not. It could be the laws. It could be regulations. Okay. So I will have to check all those things. So this is the meaning of the word criteria. Okay. Next, guys, sufficient and appropriate audit evidence. What does this mean? It simply means, guys, the practitioner will gather evidence to form conclusion and opinion. And what kind of evidence he is going to gather? All of you know this, that he has to gather sufficient and appropriate evidence. And when I say sufficient, sufficient means quantity, and appropriateness is, of course, there is a mistake in the spelling. Anyways, appropriateness means what? Quality. Okay. Anyways, and then finally what happens, guys, after gathering evidence, ultimately the practitioner is going to give an assurance report. So assurance report is nothing but outcome of the entire assurance engagement, and these are basically conclusions given by the auditor about the subject matter. So remember this very important question, guys. What are the elements of an assurance engagement? We have five elements, guys. What are the five elements? Again, I'm repeating. Number one, three-party relationships. Who are the three parties? Practitioner, uh, responsible party, intended users. Then there has to be something called a subject matter, then a criteria. After this, by applying criteria, the auditor is going to gather evidence. He has to gather sufficient and appropriate evidence, on the basis of which he is going to give his assurance report, written assurance report. That's it. Okay, so these are the elements of an assurance engagement. Now if you see with this, guys, the concept of assurance engagement is over. Okay, now the most important part, okay, and perhaps this is something which we are going to do in the entire subject of auditing. We have to do so many standards, right? So first let us understand the basics of these standards. We have a topic, if you can see, engagement standard basics. So I'm going to teach you here what would be the different engagement standards, and then towards the end of this chapter, guys, we are going to cover one standard, which is SA 200. Okay, so what is engagement standard? Let's go with the basics. First thing is, I would want you to understand the different types of engagement standards. But before this, again, let me take you back to the main notes, guys. And while I was taking my regular sessions, I remember, guys, I made this diagram, right? That a chartered accountant, just to make you revise, a chartered accountant can either serve the society as a practitioner, or he may be in some job. And if he is into practice, guys, okay, he may render two types of services. He may give two types of services. What are the two types of services? Either assurance engagement, the definition we just covered. Okay, assurance engagement is an engagement in which auditor gives some level of assurance, okay, to the users. And there can be other works also, guys, wherein we don't give any assurance. Okay, it is basically called as other related services. Here we don't give any assurance. Now, for example, if the company has asked us to compile the financial statements, if the company has asked us to represent their case with the income tax department, here we are not giving any assurance. Okay, we are just doing their work, let's say. So this will be called as other related services. Now, under assurance engagement, I hope this is clear to everyone. Okay, going back to the chart. Okay, yeah, so if I tell you what are the different engagement standards, okay, now you have to see, we'll discuss this with respect to the types of work that an auditor can do. So I told you that there are two types of services which a practitioner can render to the society. One is assurance service, and the second one is non-assurance services or related services. Okay, now under assurance service, now assurance service means a service wherein I'm giving some form of assurance. If the subject matter is historical financial statements, Historical financial statements means what? Things which have already happened. Okay, so if I'm let's say auditing the financial statements of 31st March 2023, things which have already happened, it's a historical financial statement. Okay, so if my subject matter is historical financial statements, now I have to see, and when I verify the historical financial statements, if I'm giving reasonable assurance, if I'm giving reasonable assurance, it would be called as audit. If however I am giving only moderate or limited level of assurance, it would be called as review. Okay, I hope you understand this. Guys, what is reasonable level of assurance? Reasonable level of assurance means it's a high level of assurance, but it does not amount to absolute assurance. We don't give 100% guarantee even if we do the audit that the financial statements are giving true and fair view. We only give reasonable assurance. Let's say 70-80% we feel that the financial statements are giving true and fair view. Again, I'm repeating this. Reasonable assurance means high level of assurance, but it is not an absolute assurance, right? What does moderate level of assurance means? Moderate level, of course, limited assurance. It's also, guys, I can say a moderate level of assurance, but not a high assurance. Okay, as compared to audit, we don't give a very high assurance in review. Now, the thing is, guys, so if you are doing the work of audit, if you are doing the audit, you have to follow. We are on the topic of engagement standard types. So you have to follow which standard? All of you know this. You have to follow standards on auditing. If, however, you are doing the work of review, in very layman's terms, I always see reviews like younger brother of audit. In review, we don't check things in as much detail as we do it in audit. Like in audit, we will assess the accounting and the internal control system in detail, and in review we don't do all such things. Okay, like for example, review might be just for the quarterly financial statements of a listed entity, so we would just check whether the financial statements are accurate, etc., right? So review is like checking less things. It's not done in as much detail as we do it in audit. It's like a younger brother of audit, right? So when you're doing the work of review, you have to follow standards, which is basically review engagement, standards on review engagement. Now, in your intermediate level, guys, syllabus, we have standards on auditing in our course, standards on review engagement, and other standards are a part of CA final curriculum. Okay. Now, if the subject matter happens to be other than historical financial statement, let's say it could be a prospective financial statements, that means things which has not happened yet. Okay, so in that case, guys, anyways, we can't give reasonable assurance, we can't give absolute assurance. We are auditors, guys, we are not astrologers. We can't give reasonable assurance that this will happen. We can't give, of course, forget about the absolute assurance, we can't even give reasonable assurance that these things are going to happen in future. We can only give moderate assurance here. Okay, and remember, guys, when we are giving moderate level of assurance on a subject matter which is other than historical financial statements, so this type of work is called as assurance. Okay, institute perhaps couldn't find any other word, so they have given the word assurance only, right? And if you're doing such kind of work, you have to follow standards on assurance engagement. We call it as SAE. Okay, and finally, guys, I told you we as chartered accountants, we can also indulge in other things. I mean, wherein other activities, other services, wherein we don't have to give any assurance. For example, guys, it could be, let's say we are compiling the financial statements, we are doing some agreed upon procedures, etc. So remember this, that we have related services or non-assurance services wherein we don't give any services, no assurance, sorry, we don't give any assurance. So this type of work is called as related services, and the standard that we have to follow is basically standards on related services. So these are the four different types of standards, and collectively, guys, always remember, collectively these four standards are called as engagement standards. Okay, now I want you to write in the chat box or in the comment section, guys, do you know that apart from these four standards, do we have, apart from these four engagement standards, guys, do we have any other standard? Yes, I want an answer, guys, in the chat box, please. SQC, yes, right. So please remember, guys, engagement standards, when I say engagement standards, these four standards are collectively called as engagement standards. But you have to remember, guys, that if you're giving any of these services, you have to apply standards on quality control, SQC. SQCs are to be applied for all the services covered by the engagement standards. Okay, so generally what happens is engagement standards are these four, and whenever you're giving any of these four services, I mean, let's say whether you're doing audit or review, or you're giving assurance services or any other related services, you have to ensure quality when you're doing the work. So we have a separate standard on quality control that also has to be followed. Okay, all right. Now, again, guys, very theoretical and very basic topics. Why do you think these standards are needed? Guys, number one thing, okay, I just want to ask you again. If I am an auditor, okay, I'm doing the audit of the financial statements. Number one, are standards on auditing mandatory to be followed? Yes or no? Do you think these standards are mandatory? Yes, these standards are mandatory. They have to be followed, right? Okay. So let's understand, guys, why standards are needed first. We have certain points, guys. See, it's very simple, guys. When you follow the standards while you're doing the audit, it ensures consistency with global practices. I mean, understand this. The standards that we have, right? The standards that we have in our course, they have been adopted by the international standards, guys. So when we follow the standards, we are actually following, we are actually, I can say, which we are actually being consistent with the global practices, things which are followed globally. So the number one advantage, I mean, as to why standards are needed is basically to ensure consistency with the global practices. Okay, next is basically, guys, if I follow standards and do the audit, it is going to enhance the quality of the financial reporting. Now please understand, okay, enhances quality of financial reporting. Guys, the topic says why standards are needed. Okay, so standards can be auditing standards, standards can be accounting standards also. Okay, who is supposed to comply with the requirements of accounting standards? The management, right? Now if management follows AS or Ind AS properly, and then they make the financial statements, the reliability, the quality of the financial statements, financial reporting enhances. Okay, so enhances quality of financial reporting. Okay, and please understand, again, it ensures that promotion of uniformity. Again, all the auditors, if you follow standards on auditing, they can audit in a uniform manner. Like for example, if I am an auditor, there is one more auditor auditing a different company, so because of things mentioned in the standard, he is also going to verify inventory in the same manner. Let's say physical verification of the inventory in the same manner as I do, because we both are following, let's say, SA 501. So it ensures what? Uniformity. Okay, then uh, I think this is not required, guys. Okay, let me, this is an old thing. Okay, we have 4 points. Okay, numbering you just corrected, 4 and 5. Okay, so again, standards provide professionals with knowledge and skills. Okay, so when you learn the standards, when you read the standards, guys, when you're taught the standards, of course it enhances your knowledge, it gives you the necessary skills to do the audit properly. And again, overall audit quality is going to increase, assurance of audit quality. Now please be very careful, guys, about point 2 and point number 5. I mean, this is, there is a mistake. This should have been point number 5. Okay. Anyways, so what is the difference between this and this? Point two says enhances quality of financial reporting. Okay. That means, okay, of course, when you do a better audit, guys, there would be better financial reporting. The users will be able to take better decisions. Okay. So anyways, the points are very simple. Consistency with global practices, uniformity, enhances quality of financial reporting. Then we have assurance of audit quality, and it provides the professionals with the knowledge and the skills. Okay, all right. Now the last topic with respect to engagement standard basics, very theoretical, I know, nothing much to explain here. Okay, duties on in relation. Okay, again, duties in relation to standards. What are the duties of auditors with respect to standards? Okay, all of you know this, that we have to mandatory follow the established standards. Okay, and these standards, what happens, guys, in these standards, all of you have studied so many standards already, right? So you know that these standards will tell us procedures. There would be procedures mentioned to obtain sufficient appropriate audit evidence, right? So we have to follow these established standards. But sometimes, guys, what is mentioned in the standard might not be very much effective. Okay, we might, let's say, not be able to do it. So in that case, you have to perform alternative procedures. And when you perform alternative procedures, you have to document also what alternative procedures you perform. And whenever you are departing from any of the requirements of the standards, guys, you have to also document reasons for departure. Okay, anyways, not very important. So these are our duties with respect to standards. Okay, and if you see, guys, with this we have covered the basics, we have covered the preliminary part, the fundamentals, before actually we can start with a particular standard. We have covered the different types of engagement standards, we have covered as to why standards are needed, and also we have covered what are the duties of an auditor in relation to standards. Okay, now the time has come that yes, we are in a position, guys, to go ahead with this standard. And as a part of our chapter number 1, okay, I would be covering one standard, SA 200, so which happens to be a very important one from CA intermediates perspective. So let us now quickly understand SA 200. Okay, now if you see SA 200, what is the name of the standard, guys? Overall objectives of the independent auditor. I'm repeating the name, I'm reading it slowly. Overall objectives of the independent auditor and the conduct of audit in accordance with standards on auditing. Okay, so here, guys, in this topic we are going to primarily learn about three different things. We are first going to cover what are the objectives of an independent auditor, and then we are going to cover the different requirements of SA 200, and towards the end we'll conclude chapter number 1 by reading the topic as to what are the inherent limitations of audit. Okay, so let's understand, very simple, guys, what are the objectives of an independent auditor? All of you know this. Okay, number one, to obtain reasonable assurance. We are only going to have reasonable assurance that financial statements are free from material misstatements. Okay, we are going to obtain reasonable assurance. Okay, that financial statements are free from material misstatement, so as to enable the auditor to express an opinion that financial statements are prepared as per applicable FRF. Okay, so guys, all of you know this, in audit we only obtain reasonable assurance. What kind of reasonable assurance? That financial statements are free from material misstatement. Why would be needing such assurance? So as to enable the auditor to express an opinion, so that ultimately we can give an opinion that financial statements are giving true and fair view. That means the financial statements are prepared in accordance with the applicable FR. Okay, so this is first objective. But then our objective doesn't end here, guys. After doing this, you all know that we have to give written assurance reports, right? So we have a point to report on the financial statements. The report on the financial statements, we are going to give a report, and this report is going to serve as a communication, guys, and communicate as required by standards on auditing. Okay, so this is the objective of independent auditor. Again, guys, to obtain number one, reasonable assurance that financial statements are free from material misstatements. Okay, and why would you obtain reasonable assurance? So that it enables the auditor to express an opinion on the financial statements, whether the financial statements have been prepared in accordance with the applicable FRF, and finally to report. Okay, now I hope, guys, all of you know this, that reasonable assurance is different from absolute assurance. Absolute assurance means 100% guarantee that financial statements are free from material misstatements. In audit, we never give 100% guarantee. We only give reasonable assurance. Repeating it again, reasonable assurance is not complete guarantee. It doesn't mean absolute assurance. Okay. Remember, reasonable assurance is a high level of assurance, but it does not amount to absolute assurance. Okay. Now, we have to give reasonable assurance that financial statements are free from material misstatements. Now, all of you must be very familiar with these words now, but still, just for your sake of revision, guys, misstatements could arise either because of fraud or error. Misstatements means anything which is, let's say, not in conformity with the accounting standards. Okay, so we have to see whether the financial statements are free from material misstatements. And finally, if you can see the second basically objective, the opinion that we have framed is basically required to be reported and communicated. We have to communicate in accordance with the standards on auditing. All of you know this, that the report has to be written audit report. That first part of the topic, objectives of independent auditor, is already over. Okay, now, if you remember, I told you I'm going back to the main master chart of chapter number 1. If you see that, in the introduction to auditing part, guys, we had this topic, objectives of audit. I told you you'll be able to understand it better when we, go through the topic of, let's say, SA 200. Okay, so we have covered objectives of audit in the chapter of, in the topic of SA 200 already. But then here also, I made you read through this concept that whenever we express our opinion, it should not be considered as an assurance to the future viability of the enterprise, nor the effectiveness or efficiency with which management has conducted the affairs of the enterprise. Okay, all right, let's go back to SA 200. Fine. So objective of independent auditor is done, guys. Let us now understand the requirements of SA 200. And all of you know this, that we have got five requirements of SA 200, guys. What are the five requirements? Let us first quickly go through the names. If you can see on the screen, we have got five requirements. Number one, ethical requirements, then professional skepticism, then something called as professional judgment, sufficient and appropriate audit evidence, and finally the conduct of audit in accordance with standards on audit. Okay, now what is meant by ethical requirement, guys? uh, all of you know this: auditor shall comply with the relevant ethical requirements including independence, and he is required to comply with code of ethics issued by ICA. All of you know this, that we as auditors, we have to follow certain as chartered accountants, we have to follow certain code of ethics which is issued by ICI. Okay, and as a part of ethical requirements, I should also remain independent, guys. And independence, all of you know this again, that it comprises both independence of mind and independence of appearance. I should be independent from my mind, and I should appear also to be independent in the eyes of third parties. With respect to independence, we are going to cover more in another chapter. Okay, but then, guys, I told you that the auditor is required to comply with the code of ethics. Okay, so if you remember, guys, what are the five fundamental things that we have to comply with? Okay, so let's understand the fundamental principles that we have to apply, we have to comply basically. Okay, so if you can see, we have got five ethical requirements: integrity, objectivity, professional competence and due care, then we have confidentiality, and we have professional behavior. Okay, let us just quickly go through these words. If you are able to recall, what does integrity mean, guys? Integrity means that the auditor has to be honest, straightforward. When I say objectivity, objectivity means the auditor has to be impartial, he has to be unbiased. Okay, professional competence and due care means that you have to be professionally competent. If you are sending any of your staff members to do the audit, he must be competent, he must have the necessary knowledge and skill. We as auditors, we always need to keep ourselves updated with the latest changes and all. So this is what is meant by professional competence and due care. Okay, now, fourth ethical requirement is confidentiality, guys. Confidentiality means what? That during the course of our audit, we might come across a lot of information of our client. Okay, so we are not just going to go and disclose this information to any random person. We have to maintain confidentiality. Okay, however, there are certain exceptions. For example, if I am bound by some legal or professional responsibilities, then of course I'll have to disclose the information. Or it may be so that I take permission from the client, that client, Mr. Client, I like your internal controls, I have a seminar to speak about internal controls, can I quote your example there in the seminar? So I can take the permission, and if the client allows, I can basically use the information. So confidentiality, this is the ethical requirement. And next is, guys, professional behavior. Now when I say professional behavior simply means that we have to be we have to have a professional relationship with our clients. It can't be an emotional relationship. I mean, let's say, our client is asking us, sir, due to COVID, our sales has gone down, and this year we did not do much business. Sir, this year, please take 5,000 rupees as fees. We have been giving you 20,000. Please, sir, take 5,000. Now, if you agree to this, guys, probably it might impact the quality of your audit. So we shouldn't be, uh, you know, uh, much based on the emotional relationship. But yeah, our relationship with our client has to be a professional one. We should not indulge ourselves in any such things which is going to bring disrepute to our profession, to the institute. Okay, so guys, yes, when I talk about ethical requirements, always remember that the fundamental principles. What are the fundamental principles? Again, I'm repeating: integrity, objectivity, professional competence and due care, confidentiality, and finally we have professional behavior. Okay, all right. Now, so ethical requirements also would, we would discuss about independence also here. Again, I'm repeating, guys, independence has to be there, right? Of course, in audit, it is one of the basic requirement. And as an auditor, I have to be independent in from my perspective. I mean, as a state of my mind, and also I have to appear to be independent in the eyes of third parties. We are going to cover this later in the upcoming chapter, guys. Okay. All right. So first requirement of SA 200 ethical requirement is over. Next again is professional skepticism. Now, what does this mean? Now, professional skepticism, what I've done is we are going to understand the meaning of professional skepticism, and we are going to understand few examples or circumstances where we should always be alert, or you should switch on your professional skepticism antenna or radar. Okay. So what is professional skepticism, guys? Professional skepticism basically is an attitude of the auditor due to which he remains alert. You have to be vigilant for possible misstatements in the financial statement. So it's basically guys, it's a mindset of the auditor. Okay. And it's like you can say that the auditor must be having a questioning mind, but that doesn't mean that you are going to doubt every time on your client. You are going to look into your client with the eyes of suspicion. No, it doesn't mean that. But yes, it simply means that you have to remain alert throughout the audit. Okay. So it is an attitude. Please remember the word. It is an attitude of the auditor due to which he remains alert for the possibility of misstatements in the financial statements. You have to have a questioning mind always. It shouldn't happen that the client comes and gives you anything and you just trust it. I'm not saying you are going to look at the document with suspicion, but then you have to be alert. It shouldn't happen that the client takes advantage of us. Okay. All right. So it is an attitude of the auditor due to which he has to remain alert. Okay. It's basically attitude which includes a questioning mind. Okay. For any possible misstatements in the financial statement. Now, there can be important question which can be asked from this part. As to, they will ask you what is professional skepticism, and then they'll ask you certain examples or situations where you have to be alert. Okay, you have to exercise more vigilance, let's say. So let's understand few examples. Very simple, guys. If you come across some contradictory audit evidence, let's say management has given some other information, and through documents you got to know something else. There is a contradictory thing which has happened. So in this case, of course, you have to be more alert. Second, if you come across any conditions which indicate possibility of fraud, then of course you have to be more alert. Okay. Third, let's say you had asked management for something, they have given you a reply or they have answered to your question. So in that case, probably if you have doubts on the reliability of the documents which they have given, or if you have doubts on the responses which they have given to you, probably, of course, then you'll have to be more alert. And guys, sometimes I told you that it is not possible for us to, see, the standards on auditing mentions the audit procedures, right? But then there is a situation wherein you have to perform some more procedures other than what is mentioned in the standards on auditing. If you feel you have to get more evidences so that the evidence becomes sufficient and appropriate. If you have to do extra procedures other than what is mentioned in the standards on auditing, that means it's a critical area. You have to be alert. So the point says circumstances suggesting the need for audit procedures in addition to those required by standards on auditing. So always remember, guys, these four examples. Okay. All right. Next is professional judgment. What does professional judgment mean, guys? Again, we are going to understand the meaning and some situations wherein the auditor has to exercise professional judgment. So let's go with the meaning, guys. What is the meaning of professional judgment? It says during the course of audit, the auditor makes judgments in various situations. See, always remember, guys, we are not going to take or make decisions during the course of our audit on the basis of our intuition. It's not like let's toss a coin. If head comes, I'm going to apply this procedure. If tail comes, I'm not going to apply any procedure. We don't make decisions in this random way, right? Our decisions should always be backed by three things: E, K, and T: experience, knowledge, and training, guys. So the point says our decisions, our judgments should always be based on our experience, knowledge, and training. This is what is meant by professional judgment. Okay. And if you have covered audit, guys, you must be knowing that in so many different areas the auditor has to exercise professional judgment. So we are just going to understand few situations. When you plan and perform the audit, guys, you have to you have to exercise professional judgment. When you're determining materiality, when you're determining the materiality amounts, etc., then it's a matter of professional judgment. Again, what audit risk you are is acceptable to you. It's a matter of professional judgment. How much procedures are you going to apply? What kind of procedures are you going to apply? So the nature, timing, extent of audit procedures to be applied, again, it's a matter of professional judgment. Upon applying the audit procedures, have you obtained sufficient and appropriate audit evidence or not? Again, it's a matter of professional judgment. So guys, there's so much, I mean, everywhere, every decision, of course, so many decisions we have to take during audit, so it requires the application of professional judgment. The conclusions that we draw, again, it is a matter of professional judgment on the basis of evidence that we have obtained. So you already know so many different situations or examples wherein professional judgment is required. Okay, all right. Now the next is, guys, as a fourth requirement of SA 200, you have to obtain sufficient and appropriate audit evidence. What does it mean, guys? All of you know this. Sufficiency means quantity, and when I say appropriate, it means quality. You have to obtain both, I mean, sufficient and appropriate audit evidence. And finally, guys, I've been telling you this, that standards on auditing are mandatory, right? So conducting of an audit, it has to be done in accordance with standards on auditing. What does it mean, guys? Auditor shall comply. See the word, auditor shall comply with all essays which are relevant to audit. Okay, so I have to comply, mandatory, all the standards which are relevant to the audit. Now, guys, it might so happen that sometimes the entire standard is not relevant. Now, a good example which comes into my mind is, let's say, SA 501. 501 talks about three things: inventory, the existence and condition of inventory, litigation and claims, and third is segment reporting. Now, for example, the client doesn't have inventory. So 501 is applicable. Let's say they have segment, they have litigation, or let's say any one part. So it doesn't mean that 501 is going to be applicable in entirety. Only relevant portion will be applicable. So please remember first 2 points. First point says auditor shall comply with all essays relevant to the audit and follow only relevant portion of standard if the entire standard is not applicable. Okay, and I told you this already, guys. If you are, if sometimes what happens, the procedures mentioned in the standard might not be effective, you might wish to deviate. So in that case, you will have to perform alternative audit procedures, and if there is any deviation, guys, you will also have to document the reasons for deviation, right? So this is conduct of an audit in accordance with standards on auditing, right? So yes, we have quickly covered the different requirements of SA 200. What are the 5 requirements, guys? Again, ethical requirements, professional skepticism, professional judgment, sufficient and appropriate audit evidence, and conduct of audit in accordance with standards on auditing. Okay, now we are going to conclude the first chapter, with the topic of inherent limitations of audit. Inherent limitations of audit. Now, what is inherent limitation? First, understand this. Inherent means something which is there, which is there with the subject since the inception of the subject. I mean, since the inception of the profession of auditing, these limitations are there. This is something which is inherent, which is ingrained. It can't be separated. The limitations will always be there. So these are called as inherent limitations of audit. Okay. Now remember this, guys, that due to these inherent limitations of audit that we are going to cover, auditor is only able to give reasonable assurance. He can't give absolute assurance. Because of these inherent limitations of audit, auditor is only, let's say, he can't bring down the audit risk to zero. He can only bring it down to an acceptably low level. Okay. So what are those inherent limitations of audit? Let's just quickly go through it. Now, if you can see, we have got primarily 4, or rather 3 only, I should be saying. We have got 3 primarily prime limitations of audit. Okay, what are those? Number 1, nature of financial reporting. Nature of financial reporting, not in our hands, I mean the auditor's hand, but the financial statements which the management makes has some limitations, because of which we can't give 100% assurance. What are those limitations of the financial reporting? Nature of financial reporting, it says preparation of financial statements involves judgment by management. So management only is using judgments. Okay, they use a lot of accounting estimates, and in accounting estimates a lot of subjectivity is involved. It's not an objective assessment, it's a subjective thing. Management feels that this must be the amount of bad debt, and accordingly they have made it. So there is, always remember, guys, our financial statements also, whatever transactions, whatever items you see as a part of your P&L balance sheet, some of them are merely based on estimates and judgments of the management. Okay, there is no there is no proper amount, okay, that can be determined through some underlying document and all. If I ask management, hey, why did you make provision for doubtful debts as this much? We feel that this debtor is not going to pay. I mean, of course, they have some reasons, but it's totally based on estimates, judgments. What if in the next year he pays, right? So please remember the nature of financial reporting. Remember three words. Financial statements preparation would involve management's judgment. It would include estimates, and all these things are very much subjective in nature. Okay. All right. Next is nature of audit procedure. Now, in this part, we are going to discuss about limitations from our end. Okay, things which is there from our end. So, nature of audit procedure, if you see, it says, guys, number one, most of the audit evidence that we gather is persuasive in nature rather than conclusive. Now, what does it mean, guys? Conclusive, as in we don't have a concrete proof. The evidences that we obtain is more of persuasive in nature. Okay. Now, for this, if you are able to recall in my regular classes, also I give this example, right? Let's say there's one sale transaction which I've picked up. Okay, that sale transaction happened, let's say, towards the end of the financial year, around 25th, 26th of March. It's a big amount. Let's say 50 lakh sale transaction. One sale transaction amounting to 50 lakh rupees. Now, when I saw the transaction, the details of the transaction, I saw that the transaction has been made to the subsidiary company. The holding company has made the sales transaction to the subsidiary company. Now, immediately, my professional skepticism antenna, I mean, I was super alert. I felt that this must be a bogus transaction. Maybe the holding company has done this transaction just to show inflated sales, just to show that they have, have grown from the previous year. 50 lakhs is a big amount. So I asked management about with respect to the documents. I told management, I feel it's a bogus transaction. Management is like, sir, what are you saying? We have all the proofs and documents. So the number one thing that they gave me was, let's say, they showed me the invoice. See, we have the valid invoice. So I was like, hey, invoice, you have only made it, right? How will I believe? So then they told me, okay, sir, invoice is an internal document. So we'll give you a purchase order. We'll give you the copy of purchase order which we received from the subsidiary company. So it's an external document, right? Yeah, it's an external document. But then the subsidiary company belongs to you only, right? They are going to do anything what you say. So purchase order also, I'm not very much happy with the purchase order. Then the management of holding company, they give me 10 more evidences. They show me the transporter's challan. They show me, let's say, that the security guards register that goods actually went out of their factory. The goods have actually gone out from the holding company's premises to the subsidiary company's premises. All these documents they show me. Okay. And then again, guys, I feel that it is a bogus transaction, and maybe in the next year they are going to do a sales return transaction. But then what is going to happen? Even if I know it that it's a, I mean, they have given all the proofs and the proofs are genuine. I mean, I can't just say that it is because of my intuition. I feel that the sales transaction will be reversed next year. It has been merely done to inflate the sales. I can't do this. I can't give a qualified opinion in this case. So what has happened? Despite my audit procedures, I am only getting persuasive evidence. Most of the evidences that I obtain is persuasive rather than conclusive. Okay. In the next year, when I went to the audit for the audit again, probably the management told me, yeah, sir, the subsidiary company did not like the quality of the goods that we had sent, and hence it's a sales return now. So I knew it from the beginning, but then I can't qualify my opinion right here because they have given all the necessary evidences. They have shown me the invoice. They have asked me to see the GST returns. They have given me the copy of purchase order. They have, gave me the bank statement also that they have actually got the payment from the subsidiary company. They have shown me the transporter's challan. They have shown me the security register. So many documents they've already shown. And of course, I can't just give a qualified opinion here, right? Anyways, number one is that we are talking about the nature of audit process. So number one is most of the audit evidence that we obtain is persuasive, guys, rather than conclusive. And management TCWG might not provide us complete information. What if some transactions are omitted? We won't even get to know about it. Okay. And if, let's say, management has indulged in some fraud, we might not be able to detect that also, guys. See, our work is to see whether the financial statements are giving true and fair view. We don't have the investigatory powers and all. Okay. All right. Next is, guys, limitation with respect to time and cost. All of you know this, that we just can't do one particular audit of a financial year for 3 years, right? We have to complete the audit. We have to give the audited financial statements to the management. Thereafter, the management is going to share the audited financial statements with the shareholders at least 21 clear days before the AGM, and then it would be presented, adopted in the AGM, right? So we have a timeline, guys, before which we have to complete the audit, and hence, because of this limitation with respect to time and cost, we resort to something called as test checking. We can't do 100% checking, guys, and we would want to focus on those areas wherein which is more risky in terms of misstatements. Okay, so we don't resort to 100% checking. We do something called as test checking. We go for sampling. Okay, this is one limitation and of audit. Okay, and with respect to others, we have, guys, we can't comment about the future things which might happen. Okay, maybe the company is doing really well now, but next year, because of, let's say, COVID lockdown, the company has shut down its operation, so we could have not anticipated this, right? So another limitation of, inherent limitation of audit is that we can't predict the future events, etc. And again, let me tell you this, guys, in the nature of audit procedure, you can write one more point also, that we don't have investigatory powers, hence we can't, I mean, even if we do the audit, we, there might be cases wherein we are not able to uncover the fraud which management has basically perpetrated. So this is one more limitation of our audit procedures, right? Okay, so with this, guys, the inherent limitations of audit is complete. Again, let me just repeat, what are the four inherent limitations that you have to keep in mind? Number one is nature of financial reporting. Second is nature of audit procedures. Third is limitation with respect to time and cost. And the fourth is basically others. In others, you can write about future events. You can write about the going concern aspect. You can write that, of course, audit is not an investigation also. Okay. All right. Now, if you see, guys, with this, I'm going back to the master chart. We have completed the entire revision of chapter number 1. Okay.